So I'll give you more of the tops of the waves on two deals, just because they're so different. So you have all of our storage facilities very similar. So you have about 130,000 square feet of rentable space managed by CubeSmart. Very simple project in terms that of, it's a 14 or $12 million build. A lot of it, $2 million in improvements, $10 million in concrete and steel. But you're hiring professional management companies, professional project managers, professional general contractors that are building some of the largest facilities in the area. So they're pretty easy to manage, right? You need a good team in place to do that. So we have our co-sponsor that lives down there. He's managing the day-to-day. And when I say that, I mean he's managing what the general contractors are doing and making sure that his reports are lining up with our expected timelines. But it was a $12 million total project. We raised $4 million in capital. We did an $8 million construction to perm loan with a local bank that wanted to get into the self-storage space down there because Orlando's blowing up. And we got really favorable terms, 4.65% on an interest-only construction basis that accrues during construction, and then or with an interest reserve, and then it'll perm out once we get to stabilization to, I think it'll be just around 4% at this point. But $12 million total cost, we estimate the value to be around $23 million once it's stabilized. So really fantastic deal. And then the other portion of that is how do we pay our investors? So we pay our investor based on a preferred return. So every deal is a little bit different, but what it means is that they take the first piece of the pie after the debt service gets paid, and then we don't make anything until they make their preferred return. And that's how we've structured all of our deals. Because we're from the single family space, we found that people wanted to invest, not think about it, and get a flat return that they can rely on. So that's the structure that we came up with, where we're able to give them significantly above market returns with the security and consistency that they wanted. Sure. So we do acquisition fees, and we split that out with our co-sponsor. And then on this one, there's a project management fee to build it, because we have to manage the general contractors. And then there is a small asset management fee that goes along with the everyday management. But it's pretty small. I'm between 2 and 3% on the acquisition side, 1 to 2% on the asset management side, and that's of the income that we have coming in.
Mm-hmm.
And the project management fee is probably another 2% or so of the total project cost. So we don't fee our investors to death. Obviously, we have to do a lot of work to get these deals off the ground. But yeah, we're basically just trying to pay the bills while we're managing the project. And then the upside really comes when we buy and sell these things.